It is Wednesday, July 29th. We're 3 hours into trading. Hello, traders. Let's find some day trade. Let's see what's going on in the market. We've got the S&P 500 getting through the prior day's high. You can see how it tried a couple of times to get through that level. Finally, we're through it, making marginal gains. That tells me that there is some resistance in place, but a really pretty decent day. You can see how yesterday everything looked really good. Toward the afternoon, we were establishing a new high of the day. We had gotten through the prior day high, and then the bottom fell out. So we can expect some really choppy trading conditions. If we zoom out, go into the daily chart, you can see how the market really hasn't gone anywhere in the last, 2 months, really. We've been floating higher on very light volume, so there's not a lot for us to sink our teeth into right now. We're in earnings season. Earnings are going to climax this week. We have major tech companies announcing earnings tomorrow, Thursday, after the close. The likes of Google, Amazon, Apple, Facebook. Those are some of the tech giants. I had mentioned yesterday in my video that if you took the S&P 500, there are 10 stocks in the S&P 500 that are up 35% this year. The other 490 stocks are down an average of 10%. So the rally has been very concentrated. This is a low quality rally, in my opinion, this bounce that we've had since the March lows, and we have to be very cautious. When these major tech companies announce Thursday after the close, we could have a mixed bag. A couple of them could be higher, a couple of them could be lower. We know that they've all run really high. The valuations are pretty stretched right now, but the performance should be good. We saw Microsoft, Tesla, Intel, Netflix all announced earnings last week. In every instance, the major tech companies sold off after the numbers. So we'll see if that's true tomorrow. If we don't get that sell-off tomorrow that I'm looking for, I think that the market is going to see some profit taking in here. If we don't get the sell-off tomorrow, I believe that next week when we start getting some of the economic data points, that's where I think we could start to see some weakness. You have PPP running out. So some employers are going to be hanging on to employees as long as they can, but the next tranche is not going to be anywhere near what we saw in May. That means that the pent-up demand has to be there. Employees have to feel that their job is secure. If they're looking over their shoulder, wondering if they're going to be laid off, they're not going to be spending money. The coronavirus continues to spread. We've got a lot of states right now. I believe half the country is in a mode where they're considering retreating to phase 3 if they haven't already done that. A lot of major cities are actually looking to go back into the shutdown, the stay-at-home order. This is not good for our economy. It's going to really prolong the economic recovery. So it's going to weigh on the market. We're seeing write-downs. A week ago, we had the major banks releasing earnings. There were a lot of bad loan write-downs. We saw Santander have an 11 billion euro write-down. They announced overnight. So it's not just the U.S. Europe is also very weak. This is a global issue. I'm also seeing some weakness in China, or at least not the robust recovery that we would have hoped for 3 months after their shutdown ended. They had exports increased by 0.5%. That's a very meager number. They had imports increased by 2.7%, very meager number. So they're not seeing the pent-up demand. That's why their exports are not increasing. And their imports aren't increasing because they don't see that they're going to have the need for those materials. Retail sales in China were up 1.8%. That's not a very strong number, especially 3 months in to their recovery. I think this is going to be a problem. We have the coronavirus spreading. We got riots throughout the country. Politicians are going to be going into recess in another 2 weeks or so. So Washington, D.C. will be on autopilot. Investors tend to get very nervous. You've got a lot of asset managers who want to take profits, but they're going to wait until the mega cap tech giants post earnings. Then I think we're going to see more aggressive selling pressure. And I believe that as these economic releases start coming up, we're going to see that the job growth that we're looking at over the course of the last 2 months is really starting to stall out. Now, that PPP came into effect, and employers hired everybody back. That was part of the plan. So we'll see what happens. Personally, if you're a swing trader and you do not watch the market during the day, you need to be in cash. Do not try and short this market. I don't know how prolonged that market decline is going to be. I don't know if credit issues are going to surface or if this is just going to be a very short term round of profit taking. If we start to see some credit issues, say in another 2 or 3 weeks, then we could get into a sustained market decline. Again, these bad loan write downs, we have approximately 23 million people will be evicted from their apartments if there is not an eviction moratorium. That could be devastating for the economy. 12 million people didn't pay their rent in May. We have a lot of Americans who are living hand to mouth. They are very, very dependent on their jobs and their income, and that tells you that the debt level on a consumer basis is extremely high. Now, this is not a statistic that I know from the last year or so. This is a statistic that goes back over 5 years. The average baby boomer had $10,000 saved for retirement, just a ridiculously low number. Again, my point is that credit is stretched, and that goes for the individual, the consumer, it goes for municipalities, it goes to state governments. Obviously, we're seeing it on a federal level as well as our national debt balloons. So we'll see if credit becomes a concern. I feel that we've gotten to the breaking point right now where the coronavirus is taking its toll. The recovery is going to take way too long. We've got a lot of small businesses who may have been able to shoulder a month or two of weakness, but not 4 or 5 months. So I hope that I'm wrong, but I'm going to err on the side of caution. When I look at the market, we are about 110, 120 S&P points from the all-time high, and I feel that the upside rewards to the market are much smaller than the downside risks. And we can put those major moving averages up and see where they come into play. You can see that the 200-day moving average is at 305. I'm going to overlay an upward sloping trend line. Click my GTC alert line. I'm going to click on that candle. I'm going to click on that candle. So it comes into play right around the 320 level. Actually, I'm a little bit off on that candle right there, but I would say 320 is a support level. We've also got support around the 312 level right in here, and then we have the 200-day moving average. We cannot short until we start seeing some major technical support levels breached. Then we can start considering some shorts, but only if you are a day trader or a very, very nimble swing trader who is able to watch the market intraday. So the first level that I'm kind of looking at is right around this upward sloping trend line that brings us in around 319.50 is a support level, and you can draw a line visually right through there, and I can drop an alert line on that also so that you can see it better. But this is the support. That's the first support. That's the second support. There's third support down here around 312, and then the 200-day moving average. Late day selling with follow through selling the next day and a close on the low the next day, that would be a warning sign. We've seen a little bit of late day selling in here, but nothing too dramatic yet. We have the FOMC statement that's going to be coming out in about a little more than an hour right now. It's going to be as dovish as you could possibly imagine. The Fed knows what's happening. They see what's happening. They have no plans of increasing interest rates until 2022. So expect a really dovish comment. I think that's baked in. I don't think the market's going to rally much off of that news. So let's go back to that 5-minute chart. Let's see what we've got working right now. We're going to put up the 1OP indicator so we can see what that's telling us regarding the market right now. You can see how it's rallying up, up, up. We want to see it crest and start to roll over. When it does that, like we had right here, then there's a chance for the market to drop. This is a marginal high in my viewpoint. What does that mean? That means that every time that the market has a dip and it makes another rally, that these little additional highs are pretty tight. We're not seeing a big extension. That to me is a sign of resistance. So I would be looking for a possible short coming up here. I'd like to see this 1OP indicator continue to get extended, overextended, and then I would like to see this upward sloping trend line right here breached. So I'm going to click alert, going to click on the low of that candle right there, going to click on that candle right there. That is my guideline. When that trend line is breached and I have a bearish 1OP cross, then it's time for me to start looking at stocks on the short side. So let's go in, take a very quick look at the short side and see what we've got. We're going to bearish, and then we're going to go into pop bear, see if there's anything interesting there. BA is a stock that I'm currently short. If I go to the daily chart, you can see that downward sloping trend line that's still intact. As long as that is intact, we've got horizontal support right here. I believe the stock is going to at least test the 100-day moving average. The B above this candle tells me that earnings were before the open today. Negative reaction. Market up, stock down, relative weakness. That makes this an attractive short. Take a look at GILD very quickly. Got a major horizontal support level right there. Since I've spotted it, I'm going to click GTC. Double click on that candle right there. Whoops, I think I clicked on the wrong candle. And now on a GTC basis, I'll know if the stock breaches that. If it does, I've got a little bit of room down to the 200-day moving average for a day trade. Let's keep looking, see what else we can find. Week after earnings. Looking for a stock that would be negative on a day like today. Netflix, week after earnings. That was one of the stocks I mentioned. You can see the big spike up. There was the earnings announcement. Has been pulling back ever since. And I'm going to see if there's anything else. EHTH has been really, really weak. That's been on a bunch of the lists. You can see this breakdown below horizontal support. Earnings there. 200-day moving average breached. Horizontal support violated. Long red candles closing on their low. I can't get shorted here. You can see the big volume, but it's going to take a while for this stock to recover. I don't see anything else that particularly interests me here, so we're going to go into heavy selling. BE looked like a really decent candidate. You can see that horizontal resistance right here. That was a breakout to the upside. Earnings there. Now we have a failed breakout. Anyone that bought that breakout is going to be getting out right now. So that stock looks pretty weak to me. eBay. Another earnings announcement after the close yesterday. A couple of dojis here. I think that you'd have to see a breakdown below that $54 level. Then you can think about shorting eBay, but not a great earnings reaction. Another tech stock. Let's see what else we've got. Intel. We had a few people make money on Intel in the chat room, buying puts. Big gap down below the major moving averages, long red candles closing on their low, very little overlap. That indicates a very strong move technically. Intel probably can come down and test that 44.40 level. It may have a chance to bounce in here. Once the train is that far out of the station, I tend not to want to join it until I see a little bounce, anything, enough to tell me that resistance is still there. So I don't think I'd be shorting that here. Just going to continue to click down, see if we find anything that looks good. Here's an interesting prospect. We have WDC. They're going to be announcing earnings on August 5th, so there's a little bit of time, but you can see that it is below the 100-day moving average. And if it can get below this horizontal support here, there might be a little bit of a trade in that as well, but really a tight compression, not a big mover right now, so I'd have to avoid that one. GE, I believe, announced earnings. This is not a bad short right here. It's a cheap stock. That is at $6.60. You can see that bearish engulfing candle and that 100-day moving average is intact. I think you can short GE and you can use that 100-day moving average as your stop. You could possibly even hold that overnight. So there's the prior day's low right there at $6.70. I think that would have to be your stop on this trade. That one doesn't look too bad, but the market's been going up, so there's really nothing that's going to jump out at us as a glaring short. This is pretty nice. STM, you can see this upward sloping trend line right here. You can see how that's been violated on the downside. There's the earnings report right there. Weak relative to the market. Go into the 5-minute chart. Also plenty of room there. Here you've got an upward sloping trend line that's been violated. You can see how the market has been up, 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 up in the last half an hour. Stock down, down, down. STM looks like a pretty decent short to me. So that would be one that I'd be watching on the short side. Here's how that scenario would play out. 1OP indicator, rally, 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 rally. Nice bearish cross. Market can't get through this resistance level. Get a couple more attempts, couple of bearish hammers, tails above body. All of a sudden, the stock starts to, or excuse me, the SPY starts to crack down. It breaks this upward sloping trend line that I drew, and we get a bearish 1OP cross up in here. Aha! Now I have the market tailwind that I need on the short side. Once I know that the market's ready to roll over and it's ready to sell off, then I start looking for stocks like this that are already weak relative to the market. So if I were to short it, I would be using a downward sloping trend line like this to manage my profits in the trade. That's how we do it. So relative weak, we'll take a look and see what's in here. All these stocks are up on the day, so they're not going to be particularly interesting to me. ZM does look like it's got a chance to move lower. You can see relative weakness right in here. Market strong, stock weak. Stock is through the low of the day, and it looks like it might penetrate the prior day's close. Going to click on alert. Going to click on that bar right there, double click it. There's my alert line. If ZM breaches that and I get all the other things that I'd mentioned regarding the market, yes, that will turn out to be a nice short. So let's go in and take a look at some longs because the market has been up right now, and that's probably where we'd want to focus, at least for the day. And we can see some really, I'm just going to go through heavy buying. It's a great list. Click through, see what we've got. AMD with a massive breakout. They are benefiting from Intel's woes. And this big spike here was pre-earnings. That was after Intel posted its number. So Intel's loss is AMD's gain. So AMD looks very, very strong in here. PayPal looks pretty good. Earnings after the close. That's what the A means. So we don't touch that. Tupperware, big breakout today. I traded this, made some money on it. It looks pretty strong in here. I don't want anything that's that far out of the gate. TSM has been a strong stock. Penn looks like a good stock trying to get through this horizontal resistance. See how easy it is? We're just going through. This is a downward sloping trend line that's been breached to the upside. 100-day moving average holds. This stock looks like it wants to go higher. Looks good to me. SHAK. That is a restaurant stock. That is Shake Shack. I would not be long that overnight. I would not be long any restaurant stock where they rely on indoor seating. Sit down. If you're doing to-go business, great. If it's an indoor type of restaurant with coronavirus currently growing nationwide, I would avoid those stocks like the plague. Let's keep looking here. Going to click down. Starbucks. See, they do a lot of to-go business. This is above the 100-day moving average. We had earnings after the close yesterday. Decent little reaction. FEYE is one that I really like. Here you can see this nice upward sloping trend line. You can see this little pullback here. We've broken through that, and we've broken through horizontal resistance and the 200-day moving average. FEYE is one that I like on the plus side, and that is probably going to be the stock that I highlight on the plus side today. INSG has been one that we've traded. I like it as well, but you can see how choppy it is in here. No real pace, no real direction. Yes, a nice horizontal breakout, 2 long candles closing on their high. Very encouraging on big volume. So this is all good. We've been day trading this and doing very well on it, but I don't know if it's got the strength to get through this high right here, but for a day trade, you bet, it's been very nice. So I'm just going to click through. That was actually pretty good. This is nice. This is GPS, the Gap, retailer. Not a huge fan of retail right now either, but I do like the move. Hover over the E, 827 is the earnings date, through this horizontal resistance, through the 200-day moving average. Volume, it's okay, not bad. This spike makes it look like it's not good, but volume's okay. So yeah, I think GPS could work for a day trade. It may work overnight. Just going to continue to click through and see what we've got here. If I see something I like, I'm going to let you know. That's not a bad breakout right there. You can see that breakout through that horizontal resistance point, long green candle closing on its high. Good volume in here. Earnings coming up on 8/10, so we've got time there. ORTEA. I have no idea. It's a retail group. Looks pretty good. I like it. I don't care what these companies are or what they do. And in fact, it could be the most horrible company that's lost money quarter after quarter after quarter. If I get a price pattern like this, long green candles closing on their high on big volume, I'm in. I'm going to day trade it. This is a nice breakout on JMIA. Long green candles, volume, everything looks good here. Not bad. I think that sets up pretty well too. Giving you a bunch of stocks to look at already. Don't want to keep adding to the list. It'll only add to the confusion. STM, I think, looks good on the bearish side. I think BA has got some more work to do on the downside before it starts to find its legs. FEYE, I think, looks really good. JMIA, I think, also looks really good. If you are not able to watch the market during the day, I urge you to go to cash. The big hurt is coming. It could come after the earnings Thursday. It could come sometime next week on the jobs numbers. It could come in the middle of the week as the coronavirus continues to spread, as the violence continues to spread. Nobody is in Washington, D.C. to mind the shop. I think that's going to be the window where we start to see some pretty heavy profit taking, and it could start with some of these tech stocks. This market bounce has been so narrowly defined, it is vulnerable. And if you look, I had mentioned the 10 strongest companies and the 490 companies that are down on average 10% from the beginning of the year in the S&P 500. Well, those 490 companies, that's where the majority of the jobs are. And if people don't have jobs, this recovery is going to take a very, very long time, and we could start to see some credit issues surface. The upside is much more limited than the downside risk here. If you are a day trader or a very, very short-term trader who likes to hold overnight swing trades, there's going to be an opportunity for you to get short. We just have to be patient. We have to wait for those technical breakdowns that I showed you earlier in the video. If you like this content, please give it a thumbs up. Please make sure to subscribe to my YouTube channel and turn on your notifications so that you don't miss any of these videos. I promise you I'm going to have great trading ideas in each and every one of them, along with lots of great education. Thank you. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.